Hello, and welcome to downtrend investment. This analysis is for silver as of 1st of August 2026, with a spot price of $58.34 an ounce. The full report is on downtrend.ca. A long-term buy on the 6th straight annual deficit and the monetary bid, but a hold right now, still in a downtrend below every major moving average, with real yields at a cycle high 2.41% and the industrial leg softening. Hold it and accumulate on weakness rather than chase it. The demand side is the long-term case, and it is genuinely tight. The Silver Institute projects a 6th consecutive annual deficit for 2026, and visible stocks have drained for years. COMEX registered metal is down about 75% from 2020. Supply can't respond quickly because roughly 70% of silver comes out of the ground as a byproduct of base and precious mining, so it can't ramp on price alone. The soft spot is the industrial leg, which is about half of demand. Thrifting above $50 and copper substitution in solar cells are capping the upside the deficit story promises, and a cooling economy trims it further. Real, but not a stampede. On value, silver is fair versus gold, but not cheap outright. The gold to silver ratio sits near 70, inside its long-run 65 to 70 band, so the cross-metal bargain that existed before the squeeze has already mean reverted. Silver is fairly priced against gold, no screaming discount left. Against the rate model, it's still rich. Real 10-year yields are at a cycle-high 2.41%, up from 2.31%, and a rising real yield raises the cost of holding a metal that pays nothing. The 52% fall from January's blow-off has improved the absolute picture, but it leaves silver moderately rich, not a bargain, which is what caps the short-term call at hold. Right now the tape is against silver, and this is where the near-term hold really comes from. The proxy trades below its 20, 50, and 200-day averages, a strong downtrend on every time frame. There are basing signs. The relative strength index has lifted off its low into the mid-40s, and the MACD histogram has been positive for 8 sessions. But basing is not turning, and it needs to reclaim the 50-day before the trend rearms. We can't read the futures positioning cleanly this run. The commitments data wasn't retrievable. So that gauge is qualitatively washed out, but low confidence rather than a signal. The secular uptrend is intact, just corrected. You wait, you don't chase. The near-term risks are live, and they are the reason the call is hold, not buy. The first runs through rates. The Fed is holding. Real 10-year yields have climbed to 2.41%, and if they push above about 2.6, the bear case triggers. A zero-yield metal gets dearer to hold as real rates rise, and a firm broad dollar adds to the drag. The second runs through growth. Silver's industrial leg is pro-cyclical, so a growth scare hits roughly half of demand directly, and the demand upside is being engineered down. Thrifting above $50 and copper substitution in solar cells cap exactly the leg the deficit story leans on. The swing factor near term is the 12th of August inflation print. A hot read deepens the drawdown. Now weigh the risk against the reward. The bull case is roughly 41% above today, the base case the most likely about 3%, and the bear case a fall of about 21%, so you are risking about 21 to make 41. So, our call on silver, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by downtrend investment at downtrend.ca. The link to the full report is in the notes below. Have a great day.